How to secure a car loan with bad credit. Welcome to our channel. Having bad credit can make getting a car loan feel like climbing a mountain. But don't worry, it's not impossible. Many people with credit scores below 600 successfully get car loans every day. While you might face higher interest rates and stricter terms, there are proven strategies to help you get approved and even find decent rates. This guide will walk you through the entire process of getting a car loan with bad credit. We'll cover everything from understanding your credit situation to negotiating better terms. By the end, you'll have a clear roadmap to follow, complete with practical tips and a real-life example. Remember, transportation is essential for most people. Lenders know this, which is why there are options specifically designed for people with credit challenges. Let's dive in and learn how to navigate this process successfully. Before applying for any loan, you need to know exactly where you stand with your credit. This knowledge gives you power in the loan process. What is bad credit? Credit scores typically range from 300 to 850. Here's a general breakdown. Excellent, 750 and above. Good, 700 to 749. Fair, 650 to 699. Poor, 600 to 649. Bad, below 600. If your score falls below 600, most lenders consider this bad credit. Some even consider scores below 650 as challenging. Different lenders use different scoring models, but FICO and VantageScore are the most common. How to check your credit. You should check both your credit score and your full credit report. Get your free credit reports from all three major bureaus at annualcreditreport.com. Many banks and credit card companies offer free credit score access. Credit monitoring services like Credit Karma provide free score updates. Now that you understand your credit situation, it's time to prepare for the application process. Taking these steps before applying can significantly improve your chances. Quick credit improvement strategies. While building excellent credit takes time, you can make some improvements in just 30 to 60 days. Pay down credit card balances to below 30% of your limits. Make all current payments on time. Avoid applying for new credit. Dispute any errors on your credit report. Gathering documentation. Lenders want proof that you can repay the loan. Gather proof of identity, proof of income like recent pay stubs and tax returns, proof of residence, list of references, proof of insurance, and details of your current debts and monthly payments. Having these documents ready shows lenders you're serious and organized. Setting a realistic budget. Your car payment should be no more than 15 to 20% of your monthly take-home pay. Factor in insurance, gas, maintenance, and registration costs. Not all lenders work with bad credit borrowers, and some that do charge extremely high rates. Knowing where to look can save you thousands of dollars. Credit unions are often more flexible than traditional banks and may consider factors beyond your credit score. They usually require membership, but many are easy to join and typically offer lower rates than other bad credit options. Online lenders specialize in various credit situations and often have pre-qualification tools that don't affect your credit. You can compare multiple offers quickly. Examples include Capital One, Auto Navigator, Auto Credit Express, and My Auto Loan. Subprime auto lenders specifically work with bad credit borrowers. They have higher interest rates but higher approval odds and may require larger down payments. Buy Here, Pay Here dealerships are car dealers that finance in-house. They often don't check credit but have the highest interest rates, often 15 to 25%. With bad credit, you'll likely pay higher interest rates, but that doesn't mean you should accept the first offer you receive. Interest rates for bad credit auto loans typically range from 10% to 25% or higher. The average rate for deep subprime scores below 500 is around 20%. Subprime scores 500. 600 average around 16 to 18%. Each percentage point matters. Even 2% less on a $15,000 loan saves about $1,500 over 5 years. Longer loans mean lower monthly payments, but more interest paid overall. Most auto loans range from 36 to 72 months. With bad credit, you might be limited to shorter terms. Aim for the shortest term you can comfortably afford. For example, on a $15,000 loan at 15% interest, 36 months costs $520 monthly with $3,720 total interest. 60 months costs $356 monthly with $6,360 total interest. 72 months costs $319 monthly, with $7,968 total interest. Let's follow Sarah's experience getting a car loan with a credit score of 580. Sarah's situation: credit score 580, monthly take-home pay $3,200, $2,000 available for down payment, $400 monthly current debts, needed reliable transportation under $15,000. Sarah obtained her credit reports and discovered 2 late payments, 1 medical collection for $500, and credit card utilization at 70%. She paid down her credit cards and settled the medical collection over 45 days. Sarah determined her maximum affordable payment at $500, target vehicle price $12,000, $15,000, and planned a $2,000 down payment. She applied for pre-approval with her local credit union, Capital One Auto Navigator, and a local dealership. The credit union offered 12.9% interest at $296 monthly. Capital One offered 14.5% at $307 monthly. The dealership offered 17.9% at $312 monthly. Sarah chose the credit union offer and successfully negotiated the vehicle price down from $15,500 to $14,200. Getting the loan is just the beginning. What you do afterward matters too. Making timely payments is crucial. Set up automatic payments if possible. Create calendar reminders if paying manually. Build a small emergency fund for car-related expenses. Contact your lender immediately if you anticipate payment difficulties. Even one missed payment can damage your improving credit score. Monitor your credit recovery by checking your credit score monthly. Watch for positive payment reporting. Keep overall credit utilization low. Address any new negative items promptly. Most people see significant score improvements after 6-12 months of on-time payments. Once your credit improves, consider refinancing. Wait until your score reaches at least 660, 680. Aim for at least 6-12 months of on-time payments. Shop refinance rates just like you did for the original loan. Many borrowers save 3 to 7% on their interest rate by refinancing after credit improvement. Please subscribe, share, and like this video. Your comments about future videos or just clarifying questions on what was presented is welcome. Please see this next video.